This past week of market action was exciting to say the least. Before on Christmas Eve, market was down pretty big, the S&P 500. And then after Santa Claus came, we saw the rally. Had a little bit of a Betty bounce. S&P was up 2.86% for the week. Good week for the S&P 500. We got a buy signal. However, this really doesn't change the structure of the S&P 500. So we're going to look at a little bit of that. We're going to look at a chart of the S&P 500. And then also, today's the last day of trading for December for 2018. So our momentum indicators, I want to just check real quick on that and let you know that, look, they're probably not going to change after today's price action. So all of those are negative right now as far as the longer term momentum. And so what that means is you want to be really, really cautious. This is signaling a bear market. Now, the thing that you need to know about these signals is that they will signal 8 out of the next 4 bear markets. And so what that means is you're going to get some false signals. You're going to get some what we call whipsaws. So the market's going to go down, it's going to signal bear market, and then we're going to see a rally in the market. Now, that is just something that comes with the territory, but you have to take heed to these warnings. So right now, we're very, very, very cautious about a bear market. And it doesn't mean that things aren't going to change. But we're going to look at the S&P 500, and then we'll get into this week's operating plan. And here's a look at the chart of the S&P 500. Each one of these bars represents 1 week of price action. Like I said earlier, S&P up 2.86% for the week. This last week's price action is right here on this white bar. Look at this, went right down to our second possible target. Bulls came in and boom, pushed the S&P 500 higher. This is in fact a buy signal on the S&P 500. However, when we get this, if and when we get this trigger right here on a buy signal, we're not going to take it. What we're going to be doing is looking to take some risk off of the table. So we're looking for a rally somewhere in the 2,600 range, right in there, not too much higher. But we'll see what price action looks like when it does, if it does in fact go a little bit higher. But if it does, then we're going to look to take some risk off of the table. What we're looking for to get to be more bullish on the S&P 500 is a rally and then a pullback and then another buy signal. That would be a major trend reversal. I've got one highlighted right here. So we saw this downtrend, we saw a rally, another downtrend, and then the second rally. It worked. Now, it didn't work right here on this one. You could argue that this was another another major trend reversal, but it was not. It failed, and so now that is what we're looking for right here. We'll see if we get it. With the S&P 500 being up almost 3% for the week, of course, the large cap positions were up as well as the growth positions. So, and then also the sector positions were up with regards to the U.S. equities as well. U.S. dollar down a little bit, basically a flat week for it, still in a pretty tight trading range. So what we're going to do this week, again, we're still looking to take some risk off of the table. We see a rally, we'll take some risk off. With our monthly trender positions, we definitely, absolutely want to take some risk off. We're getting the signal that we're in bearish territory. It's not looking good as far as momentum goes, and so we want to listen to those signals when we get them. Now, we may be completely wrong. We may have seen the low of the market for the next 4 years. Now, that's all right. If in fact that is the case, then we have strategy to get back into U.S. equities. So with that, I hope you have a great 2019. It's going to be a great year, and I hope you have the plans and then the discipline to follow those plans to make it a great year.